How's it guys? Welcome back to FX Rhapsody. Today we're doing analysis on two currency pairs. We're going to be focusing on the British pound, Japanese yen, and then also the British pound US dollar. Before we hit the charts, just go visit my website. It's in the bottom left corner over here. The link is also in the description, where you'll find some nice trading material. You can also find, if you are a beginner trader, there's some nice video categories that you can follow. For those of you that's a little bit more advanced in trading, there's some nice strategies that you can also look at. And also preferred brokers. These guys are absolutely brilliant. Those are under the brokers tab. And then also resources, where you can download the COT reports for free. We're using the COT reports on our analysis today. And I have updated it, so you can just go download it for free for your own use. Okay, so let us hit the charts. So we're starting off on the British pound, Japanese yen. We're doing daily analysis, moving down to 4 hourly and then 1 hour time frame. So on the British pound, Japanese yen, we can see, if you just zoom out a little bit, it has been in a consolidation mode. I mean, it's not really going anywhere. There's no real uptrends. There's no real downtrends. And if we look at our COT reports for the British pound, Japanese yen, we're starting off. Let's look at the British pound first. You can see the British pound, the net position getting a slightly little bit bigger. There's more longs being closed in the market than shorts. So the net position went from a negative 51,000 down to a negative 32,000, getting stronger and then getting a little bit weaker again. You can see this in this little chart at the bottom. So you can see this uptrend and then downtrend. And then if we look at our Japanese yen, a very similar position that it's sitting in. It went from a negative 102,000 down to a negative 64 and now going up again to a negative 67. So that is why we see this, up and down movement, not really going anywhere. But again, if you look at the daily time frame, previously, if you look a little bit backwards, we saw a little fair value gap that was created and then price coming right nicely into that fair value gap. We have that same instance again where price just tapped, it created a fair value gap, it came and tapped into that fair value gap, and now it's starting to move downwards. So will it continue downwards, or will it stay in this up and down movement, just ranging a little bit in the market? On a 4 hour time frame, okay, we looked at fair value gap just now, and then on the daily time frame, I just wanted to, there we go, zoom in a little bit. So on the 4 hour time frame, we can also see that gap being created over here. Okay, and you can see price going down, going up again into that gap, and then moving downwards again, moving up into that gap again and down. So if you had to trade that fair value gap, if you had a little trade in there, you could have ridden the trade out to almost 250 pips downwards. Okay, moving to the 1 hour time frame. There we go. So again, we're focusing on that fair value gap that was created. And on the 1 hour, you can see this nice little area that it was created and the area that you could have placed your sell. Because if we look at previous analysis that we did, we ended off with these two areas in the market that we were focusing on. And then price just breaking that, creating that long candle, bearish candle, creating that gap in the market, that imbalance. And as you can see, price going deeper into that balance. You can see price tapping into it a little bit and then going down. But again, the way that I trade that fair value gap is just taking that halfway mark, just taking around about there, and that is where basically you place your entry, and it's taking out the Fibonacci so you can see it clearly, so you can have a nicer entry if you move, or if you wait for that trade or the price just to retrace to that halfway mark of that fair value gap. And as you can see, a nice little trend downwards, not trend, excuse me, because I've been taken out. I'm not talking about trends, I'm talking about a movement downwards in the market, as you can see. Now, currently, price is sitting over here, and, like I said before, it's an up and down movement in the market. So I'm just going to be focusing on this little low. As you can see, all the previous lows have been taken out in the market. So if you zoom out a little bit, okay, you can see, and I'm actually just going to move back to the 4 hour. So I just want to explain something. So as you can see, all these lows over here, okay, these are the lows, and as the market went up, it hit a top or a area at the top, and then it started moving down. So all these lows are being taken out in the market by price action. As you can see, we do have a nice little low over here. Okay, that is an area that we can think, or we want market to obviously come back to, because it is taking out all these lows, and that is what price action does. It takes out all the lows. So we're focusing on that area and see if market is going to go back and take out those lows. So I'm going to have my area that I'm on, my line going to be drawn there, and then obviously over here. Yeah, so if we see price breaking above it and going for these highs, we will trade accordingly. If price breaks below this area, we will action our trades according as well, and we wait for fair value gap, we wait for Fibonacci retracements, any of those two methods of trading. And like I said, we will react to what the market gives us. We don't always, excuse me, I'm just going to leave that in. I'm not going to predict the market. I look at the bigger picture from the daily to the monthly just to see what it's doing, where price is at, and then obviously lower time frames, even drilling down to your 15 minutes, 5 minutes, just to react to what the market gives us. So let us move to our next currency pair, which will be, there we go, the British pound. I'm just going to go to the daily time frame, British pound, US dollar. Okay, so this, as we can see, a nice little movement upwards in the market. Okay, movement upwards, and we can confirm that with our, there we go. I don't know why I'm clicking so badly today. British pound, there we go. So as we can see, from a negative 68,000, and as you can see, the net position just went, grew stronger. And as you can see, the result of that movement upwards, and you can see that in the charts as well. If we look at the charts, that movement upwards. So it's just a little bit of more confirmation on the COT reports, higher time frames like the daily, even the weekly and monthly. I mean, that is confirming that movement upwards. Nice little pullback that the market created. I'm just going to zoom in so you can see. So you take your Fibonacci from this. Look, it created a high and a low, and then a high and a low. So you take your Fibonacci from that swing low to that swing high. And as you can see, price retracing beautifully to that 62% area. Just tapping that area, and it's a nice little buy upwards. Okay, let's drill down to the lower time frames. You can see a little bit better for that Fibonacci retracement. Okay, 4 hour time frame. Let's just zoom in a little bit. Okay, so we had two confirmations, or we'll have, we had the Fibonacci like I told you on the daily time frame. So let's just pull that in again. So we have that swing low, swing high. Okay, so it's a swing low, it's a swing high, price retracing to the 62% area. Right there. Bam. Okay, beautiful entry if you only traded the Fibonacci. But again, just going to highlight this. Okay, market breaking there, structure, just zooming in so you can see, creating a nice little fair value gap right there. Just doing that, and if you can pull sideways, bam, take this out. That fair value gap, little imbalance in the market, price retracing back. So there's two confirmations of a nice little buy setup that happened on this currency pair this week. Okay, so again, two confirmations and for that buy signal. So let us drill down, and I want to show you something else. So obviously you had price going up and then price going down, retracing to that 62% area. Again, I've talked about this many times. You don't always have to wait for that retracement to happen. You can trade the retracement, and that is what I want to show you on the 1 hour time frame. Okay, so 1 hour time frame, just zooming in. So this is the retracement to that 62% area on the 4 hour and the daily time frame. Okay, that is where we started buying upwards. Now, if you had your Fibonacci in on the high time frames and you were waiting for the price to come down, you could have sold the price going down. Now I'm going to show you something here. So obviously there was a little gap that was created. You could have bought this, bought that small little gap upwards. I've made videos about that, but you had your swing high over here. Okay, this is the areas that I was drawing out on the previous analysis. We had this high and we had this low. You saw price breaking below it, and then we waited for that retracement upwards. Okay, that is it. for a nice little sell opportunity on the 62% area and price selling down. Why did I say I was going to sell down? Previous analysis, I was talking about two areas in the market. Fair value gaps that was created. Look at this. Remember I said these areas could be exit areas in the market. Okay, not necessarily enter areas, but exit areas in the market where you could have had a sell opportunity up here to sell like we did here, and then these are your target areas. So that's the first target of 115 pips, second target of 152 pips that you could have sold down, you know. Then after that, you take your profit, and because you did your analysis on the higher time frames, you were waiting for this pullback to happen, and from here on upwards, you could have bought. So always remember, you don't necessarily just have to wait for your trade. You don't have to wait for your retracement to happen. Let's say, like in this instance, a buy opportunity. You don't have to sit on your hands just to wait for that buy opportunity. Go to your low time frames and see if there's an opportunity to sell down with that retracement. And then you can catch that buy afterwards. But currently, what we're looking at is obviously this area in the market on a high time frame. On a 1 hour time frame. We're having this line that I'm drawing there. And then I'm going to draw this line over here. There we go. So these are two areas in the market that we're waiting for. As you can see, price, hitting that beautifully where that previous retracement was, or that previous little bearish candle in between the bulls. That's a little structure. So we're waiting for price to break between or out of these two. And if price breaks above it, we wait for confirmation to either go up or sell. You just look at your fair value gaps that's being created. You look at your retracement on the Fibonacci. The more you do those things, the better you're going to get in the market. I'm not, like I said, I'm not predicting anything in the market. I'm just reacting to what price gives you. And if you go back, like I'm doing now, and you go back here, and you go back even more, you practice, and you practice, and you practice. Okay, you back test your strategies. You will start seeing these things happen in the market, because again, a lot of times people ask me, yeah, but how do you see it and why does it happen? And I've had it in my chat groups as well, and I keep saying to the guys, just go back test it. Back test all your strategies. It doesn't matter what type of trader you are, what type of strategy you have. Go back test it so that you can just get it in your head, get it in your mind. Your mind needs to be trained basically, and then you will see these things happen. So guys, that's all from my side. I hope you enjoyed this little analysis videos. And if you did, don't forget to hit that like button, hit the subscribe button, notification bell, show me some love by hitting that super thanks. And I will be making some more analysis videos this weekend. So guys, I hope you've been having a fabulous weekend. Stay safe and happy trading, guys.